Welcome to this week's Foreign Investors on India's weekly report. It is our first report for the new year 2017. We start with DGCX is a Dubai-based exchange with strong interest in India International Exchange as well as strong following of NRI. We expect DGCX to lead NRI's investments and trading participation in the Indian X in the coming months, starting from this month on the 9th, when Prime Minister will launch the exchange. Later in this report, we will have an investment and technology participation by Japan's Yanmar in an Indian tractor company. We will have a number of Sagarmala projects update as well as road construction across the country. Let's first hear from DGCX CEO, Mr. Desai, in the next clip.
Dubai Gold and Commodities Exchange (DGCX) is a very young and energetic exchange based in Dubai, UAE. It is one of the largest and most diversified exchange in the Middle East. We are a multi-asset exchange. Our largest product segment is foreign exchange currencies pairs. We list about 15 currency pairs on our exchange, but major share of our product is from INR, Indian Rupee US Dollar futures. We are today the largest liquidity pool in Indian Rupee US Dollar futures. We are also the largest open interest holder of Indian Rupee US Dollar futures globally.
Japan's Yanmar is investing 1,600 crore for an 18% stake in Punjab-based Sonalika Tractors Manufacturing Company. It is bringing in agri-technology to be introduced in the tractors. Stake is being acquired from Blackstone, an international investment company. Acquisition, Yanmar will now be holding 30% stake in the maker of Sonalika Tractors. A.S. Mittal, Vice Chairman of International Tractors Limited in Punjab, said the company has already signed a technology agreement with Yanmar for modernizing Sonalika tractors. The technology agreement and the new acquisition deal will be finalized in January 27, that is this month. The 200,000 output mostly will be for the local market, but for the first time, it will also be exported to global markets. Developments continue under India's Sagarmala port, rail, waterway related developments across the country right into the years 2035. Some 10 major port development has been finalized according to the latest update from the Shipping Ministry. Sagarmala is a most complex development in India. It involves Railway Ministry, Port, Shipping Ministry, and other urban development agencies that will ensure that connectivities between port and manufacturing hubs are in place as India's manufacturing business takes off in the coming 5 years. The government has planned out an industrial zone along the coastal areas under the Sagarmala program. It is running across various states with waterfronts. The shipbuilding industry will also benefit from Sagarmala projects. A $230 million dry dock is planned at Cochin shipyards as part of encouraging local manufacturing and production of upstream oil and gas facilities, including rigs. The government has approved 1,000 kilometers of expressways along the high-density corridors. These corridors are to link industries and industrialized regions to major export ports in the coming years. The National Highway Infrastructure Development Company is already handling 134 projects of highway building with a total length of 8,000 kilometers. The government has released 250 crore for the Lucknow Metro and ongoing metro projects in the central Uttar Pradesh state. It had earlier released 300 crore for the same projects. The project is under a joint venture between the central government and the Uttar Pradesh state government. NALCO, the National Aluminium Company, has received mining lease agreement and investment approval from the Odisha state government for its refinery and mine project in that state. Announcing the approvals, the Coal Ministry said NALCO will be commissioning its 54 megawatt wind electricity generating plant at the site. Earlier, NALCO has commissioned a 50 megawatt wind based electricity generating plant. We end this report with the Steel Ministry saying that crude steel production in the country will increase to 300 million tons by the year 2025, up from 122 million in 2015. India, with its massive infrastructure development program, remains a net steel importer. Production was about 90 million out of the 120 plus production capacity in the country. Most of the expansion will be carried out by the Steel Authority of India Limited in the coming years. We thank you for listening to us on this report and wish you a happy new year.